Halo, Mr. Herald.
Oke.
Nah, Mas.
Thank you.
Thank you.
Sorry, lambat sedikit.
Oh, it's okay. Silakan, please. Nah, pas banget ya. Pas banget. Sebenarnya lagu ini kami mau mempersembahkan lagu ini buat Mr. Herald.
Kamu mau nyanyi?
Iya, kita semua ya. Mantra, ini mantra. Biasanya kami pakai ini buat mantra untuk mendoakan semuanya supaya rezekinya tambah ya. Apalagi Mr. Herald kan bikin buku Asia Stock Market kan. Ya, jadi biar tahu ya. Gitu. Oke, kita lanjut ya. Kita mau persembahin ini buat Mr. Herald ya. Karena harus bareng.
Pertama
Nabung, kedua invest, ketiga sedia dana darurat. Oke.
enak
kan?
Di sini senang.
Iya kan? Mirip kan? Oke, mirip ya. Jadi
yang kedua,
menabung untung, berinvest untung, semua kita jadi beruntung. Ya. Ini lagu ini ada waktu itu kami latihan tahun 2017 di pasar modal. Jadi ini biar pas gitu. Biar chemistry-nya kita dapat semua gitu hari ini gitu, Sir. Ya. Oke? Nyanyi dulu ya, nyanyi bareng ya.
Setelah itu kita akan bergerak lah.
Bergerak, nanti ada timnya, ya oke?
1, 2, 3.
Pertama nabung, kedua invest, ketiga dana darurat. Oke. Menabung untung, berinvest untung, semua kita jadi beruntung.
Gerakan langsung kan?
Oke, lanjut. Oke. Kamu yang nyanyi, aku yang gerak.
Oke. Mas Herbi.
Oke, ikut ya. Siap.
Tangannya siap.
Siap, oke. Pertama nabung, kedua invest. Berdiri dulu, berdiri. Ayo, Bapak Ibu berdiri, ayo. Ayo please. Yo. Please. Mr. Herald juga harus mantap. Oke? Yes. Rekaman ini di videoin ya. Siap?
Siap. 1, 2, 3.
Pertama nabung, kedua invest, ketiga sedia dana darurat. Oke. Menabung untung, berinvest untung, semua kita jadi beruntung. Pertama nabung, kedua invest, ketiga sedia dana darurat. Oke. Menabung untung, berinvest untung, semua kita jadi. Sekali lagi. Pertama nabung, kedua invest, ketiga sedia dana darurat. Oke. Menabung untung, berinvest untung, semua kita jadi beruntung. La 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 la. Aduh. Pertama nabung, kedua invest, ketiga sedia dana darurat. Oke. Menabung untung, berinvest untung, semua kita jadi beruntung. Wah.
Bikin lagunya.
Ini ada komunitas waktu itu, makanya ini kami persembahkan buat Mr. Herald.
Mohon maaf sudah
ya, hadiahnya satu dulu nih, satu orang kita pilih siapa nih? Siapa? Mau kasih siapa? Tadi ada.
Siapa nih ya? Ada yang berani nggak ya?
Tadi
saya lihat yang semangat gini-gini malah ibu ini.
Kita berikan tepuk tangan dulu ya. Oke.
Saya ketemu ibu semalam ya di kedutaan India. Terima kasih datang lagi ibu ke sini. Nah, kita akan mulai acaranya. Saya serahkan semua ke partner saya, moderator. Mas Happy Bitono.
Terima kasih Bapak Ibu. Thank you. Sudah hadir semua. Terima kasih Mr. Herald. Tadi persembahan dari kami untuk Mr. Herald karena Mr. Herald sudah bikin buku Majapahit untuk banyak orang, lebih pada banyak orang. Tapi dari lompatan buku Majapahit bisa ke sini. Bisa. Jadi Mr. Herald udah tahu. Saya punya ada kata kuncinya di mana ini bisa dari sini bisa lompat ke sini.
Oh ya?
Saya sudah siap.
Coba.
Nah. Tapi hari ini kita akan mendengarkan presentasi Mr. Herald dulu karena Mr. Herald tadi juga habis podcast ya, Mr. Terus kemudian mempersiapkan diri untuk besok juga harus stamina harus kuat karena besok ada event. Ya, maka malam ini kita perkirakan sampai jam 7:30 persis supaya kita juga sudah menyelesaikannya. Dan Mr. Herald menarik. Mr. Herald, saya tadi malam baca full nonstop bukunya Mr. Herald ini. Ya. Jadi ya malam lah seharian gitu. Saya baru tahu loh kalau IPO-nya ternyata IPO kalau saham tuh ternyata VOC ya. Saya baru tahu, benar. Ya menarik. Nah di sini juga tadi juga dengar bisik-bisik, Sir. Di sini ada Mr. Marco juga bilang dia ngomong gini. Ini pertanyaan saya juga yang nanti akan saya ajukan, Sir. You menulis buku tentang Majapahit sama Jakarta, tapi Anda adalah seorang banker gitu loh. Aneh, nggak nyambung gitu. Tapi bagaimana? Pertanyaan saya yang udah duluan nih ya, itu karena passion, karena sering nulis, atau karena sering riset gitu. Nanti bisa dijawab. Oke, Sir. Nah, saya perkenalkan dulu Bapak Ibu. Mr. Herald adalah seorang ekonom, analis pasar saham yang dikenal secara internasional. Saat ini ia menjabat sebagai Kepala Strategi Pasar Saham Asia di HSBC, sebuah bank global. Mr. Herald memiliki lebih dari, setahu saya, 30 tahun pengalaman di pasar saham dan ekonomi Asia yang memberikan pandangan yang mendalam tentang tren pasar di wilayah tersebut. Beliau juga sering menjadi pembicara dalam konferensi internasional dan berkontribusi di berbagai media keuangan terkemuka. Selain itu, Mr. Herald juga adalah penulis buku. Ada Jakarta, Understanding Jakarta, kemudian juga Asia Stock Market from Ground Up. Waktu itu Jakarta khususnya sedang lagi masa pandemi ya, Sir ya. Ya, yang memberikan wawasan mendalam mengenai dinamika dan perkembangan pasar saham di Asia. Sir, sebelum presentasi, saya punya kuis buat Sir Herald, buat Mr. Herald. Please, harus jawab. Ini ada kuis, cepat. Pilih salah satu, oke? Siap? Oke, pertama, Hong Kong atau Singapura?
Hong Kong.
Next. Saving or investing? Investing. Terus, next. Investor or trader? Investor. Next. Bearish or bullish? Bullish. Next. Mutual fund or stock market? Mutual fund. Ketahuan. Oke, next. FOMO or misplaced confidence?
Misplaced confidence.
Oke, kita kasih kesempatan. Silakan Mr. Herald untuk langsung mempresentasikan. Terima kasih.
Saya pakai bahasa apa ya?
Please, boleh. English.
Okay.
Yeah,
because
it's okay.
Normally, I can't even do this in Dutch, my own language. Because I never talk
sorry,
about
sir.
stock markets. Here we go.
Please.
So, what we're going to do is talk about how stock markets work. They are surprisingly easy, and actually investing is probably one of the most important decisions that you make in your life. And people think it's very difficult, and bankers and a lot of other people want you to believe it's very difficult. It is incredibly simple. The problem is that you do not need to do too much, and that is seemingly very difficult for people. What I mean with this is that anybody, in particular kaum muda, you should just invest a little bit of the money that you will not need for the next 5 years, whatever that might be, and buy an ETF, an exchange traded fund, a mutual fund. That's why I picked mutual fund. Don't go after the stock that somebody says, oh, this stock is doing very good, or you should buy BCA today, or I think Astra is going to Nike, or is going to do well, or something like that. Because people who believe that you can trade are very often misunderstood. They think they can do, but they can't. We have a department of about 300 people with either PhDs or master degrees in finance, who look at stocks and talk with the management of these companies on a daily basis, and even we struggle. So if you think you do better than the market, you need to beat those people. It's like playing soccer against Argentina. You might think you play very good soccer, but Argentina is most likely going to beat you. So you make it very easy. You buy an ETF. So I always tell my own son, just put your money in something like the S&P 500 ETF. Very easy to do, takes you less than a minute to do, it's on your app, and you don't do anything with it. That's my first advice, very simple. But We're going to talk about Asian stock markets and how they work. So click. And the funny thing is that we're going to talk a bit about the history of stock markets because it explains to us how stock markets actually function. The funny thing is Indonesia stood at the basis of the whole science around stock markets, but Indonesia doesn't even know that itself. First slide. This is Amsterdam in 1602, the city where almost I come from. I was born in another city, but it doesn't matter too much. You can see a nice map here. The city is not completely built, it's quite small, and you see a bunch of ships here. Next slide. So we can zoom in on these ships. You can see the ships here in the front, and then you see a bridge here I'm going to talk about in a second as well. What happened in those days? Portugal had discovered the Spice Islands, and the Dutch wanted to get into the trade. So they wanted to go there as well. What did they do? People would come together and collect money and then buy a ship, get a captain, get the crew, and send them over to Indonesia to get spices and get them back. The problem is, of course, that the ship might not come back. You got storms, you got pirates. Sometimes these people thought Indonesia is a nice place. We're not going to go back to that windy place in the Netherlands. They just stayed here. And these sort of problems happened, right? So there was a big risk. And not only that, individual cities in the Netherlands started to do this and to compete. So if the city of, say, Rotterdam came here to Batavia and wanted to buy some spices here, actually they were in Banten in those days, and the city of Amsterdam had a ship coming, they started to fight against each other and bid against each other. And the ones who benefited from that were the Portuguese. So eventually the Dutch said, we are cutting ourselves short and the Portuguese are winning because we're fighting amongst each other. We need to get organized. And what they decided to do was a revolution. They decided that anybody in the whole of the Netherlands could put in money in one big experiment, one big venture, one big company that would not do one expedition, but all the expeditions in the next, they said in the next 20 years, but actually it went on for about 200 years, and that was the Dutch East Indies Trading Company. Not only that, they said that if you put in $5 or $1,000 or maybe $100,000 in those days, whatever it was, it would all be written down in a book. And if you needed your money back, as long as you found somebody who was willing to buy you out, then you had to go to the guys that had the book and just say, okay, Peter owns $100 in the company, but now it's Adam who's got it. And then Peter's name would be crossed out, Adam would be written in, and all said and done. To find these traders, they would meet on a bridge. Now, I don't know if you've ever been in the Netherlands. It's a real damn kind of windy and rainy place. So standing on the bridge for hours on end to wait until a trader would show up is not a nice thing to do. So they went into the cafes next door. And the cafe is actually still there. Next slide. But eventually the cafes were full as well, so they decided to build a special building. And the building is here in the back. It's a tower, and it's called the Wallet. And the wallet in Dutch was de beurs, and that's still the name for a stock market. Next slide. And this was the building. It's a bit big on this particular picture, but this was the building, and people would meet in a particular corner to trade shares, and there the guys with the books would be as well, and they would choreograph the name and then basically write another name down, and so people could start to trade shares. That was a financial revolution that was completely unheard of. For the first time in mankind, you would have a company whereby the shares could be traded publicly. That had never happened before. And this company flourished. Now, next one. If you had a stake, go back, you would get a paper like this. It says something like Mr. Gerald or whatever his name was, he's got so and so much money in the company. But you, when the ships came back, every time a ship came back, you were right on a small stake of what was on that ship. Because if somebody had $1,000 in it, but you had $10 in it, you had a small stake and he had a very big stake, right? So they would count that all out and would write down on pieces of paper, if you come to the office, oh, I see now, you have a right, 10 ships have arrived this year on 2 bags of nutmeg or cloves. And it will give you the bags and you could try to sell them in the market. Sometimes they would give you cash and they will write this down. This is the oldest share certificate in the world. It's discovered about 15 years ago in a city called Hoorn in the Netherlands. Next slide. So the Netherlands started with it, Paris soon followed after, London, New York, Mumbai, Tokyo. They all thought this was a fantastic idea and they did exactly the same. This is a picture in Mumbai. And in Mumbai they did around a tree. And the street where all these people met became to be known as Brokers Street, because there were people trying hustle and these sort of things. Said, hey, I know a buyer, I want a seller, I get you a seller or something like that, if you give me a small commission for that. So that happened on a marketplace, you can see that here. That street is still now called Dalat Street in Mumbai. It's still called Broker Street and the stock exchange is still there. Next slide. The Japanese also came with a novel invention, which you probably have seen before. They already had a rice market where people were trading, a bit of a chaotic market as you can see here. The Dojima rice market, when they closed the market at 4 in the afternoons, they came in with buckets of water, and to stop the trading for that particular day, they would spread water around so that the people would run away, and I think you can see people coming there with buckets already coming in there. But what they had is a special technology that the stock markets took over. And that is particular charts. Does it move? Yeah. That look like this. They could see every day if the price would go up, where it would finish, what the high price was and the low price in the day. We call them candlestick days. They look very technical, they're very easy. In this price, for example, it opened up here, it went all the way down here, it went up here maybe once, it went all the way down here, but it closed here. And you can see it went down because it's red, and if it goes up it would be green. Next slide. And this is how a candlestick chart, and you've probably seen these sort of charts. Not so important. The important thing was that, so the stock markets also opened up in the rest of Asia here, but the important thing was that you have a right to all the ships that came to Amsterdam for the rest of the future. So if a ship would arrive tomorrow, that's good, because you're going to get a bag of mace or maybe some money out of it. But the ships that would arrive next year, well, that's a long time away. And the ships that arrive in 25 years' time, that's not really valuable. I don't even know if I'm around in 25 years' time, right? So the money that we get now, typically we value that higher, and we give a discount to the money that we get in the future. If I tell you I can give you $1,000 you get from me now, or I give you $1,000 in 25 years time, most likely say give me the money now because I can do something with it. Because something in 25 years time you will discount. And that happened already in the market in Amsterdam, that people said, well, if these ships only come much later, then I'm not going to trade. I'm going to wait until the ships arrive. Even people went to sail out from Amsterdam onto the oceans to see if the ships were coming. Oh yeah, they're coming, and then they would sail back and try to speculate on what happened with the share prices. But this is important, that we give a discount to any money that we get in the future, and we prefer money right now. Why is that important? We go there in a second. This, by the way, the story continues. This is in, if you've ever been in Shanghai, there's an HSBC building on the Bund. Next to it is the custom building. That's where they traded. They didn't go into the shops and into the markets. They hang paper on the outside of the building, and you could see basically Mr. Lin wants to sell 5 shares for this and this price, and then you can shout, Mr. Lin, I'm willing to take that offer, and that's how it went. Actually, in the early 90s, that still happened this way in Jakarta. I've actually seen that people would be on a place and shout and say, I want to buy 1,000 shares. It was an open market, as we call it. Thanks. But that's how the trading happened. Of course, later that was computerized. But stock markets are incredibly simple animals, actually, because they are driven by only 2 things. First of all, if a ship arrives with a lot of stuff on it, that would be good for the share price. If you buy a company that you've invested in and it makes a lot of profits, that's good for you because you make more money out of it. You get more of you get your share, your dividend, whatever is divided among the shareholders, your share, the dividend, goes to you. So if the profits go up, share prices go up. Makes a lot of sense, right? However, if we only get money later in the future, the share price goes down. Or if the discount rate which we attach to the future changes, share prices can move as well, because we've just said that the value relates to when we get the money. This is a bit technical, but this is what is called interest rates. If interest rates go up, it is better to put your money in a bank and don't do anything with it and sell your stock. So that's bad for stocks. And if interest rates go down, then you don't want to keep your money inside the bank and you better buy stocks. So stocks move up when profits go up and stocks move up when interest rates go down. And interest rates can be set by central banks. So when COVID happened, what was it, 2020, 2021? I forgot actually, 2020, right? Yeah. So suddenly an epidemic happens, nobody is really doing anything, people will run a shop like Periplus right here, nobody is coming to the shops anymore, everybody stayed home. Is that good or bad for profits? That's bad for profits, right? So share prices come down. But what did governments then do? They said we need to stimulate that people go spend again and take their money out of the bank, so they lowered the interest rates. And we just said that's good for stocks. So stocks started to move up again. And in the FT, the Financial Times, they said stock markets are stupid because how can they go up in a pandemic? But they didn't think about only the profits. You have to think about what happens with the interest rates as well. And they were going down, and that's good for stocks. This is the only two things that is really important for stock markets. If I come in the morning and I look at my Bloomberg screen at my desk, I look at what happened overnight with interest rates. To be technical, that's a 10-year bond yield. So I look what happened, and then I can see what happened with markets. And if the markets moved in an opposite direction, then I can see, hey, they should have gone up, they've gone down, probably something happened with the expectations of the profits. There are only two things we look at: what happens with the profits, what happens with interest rates. Very simple. So I get an incredibly simple job. And if you understand that to a large extent, then you actually understand stock markets. Now, what happened in Asia over the last couple of years? Bang. Profits have grown quite nicely, actually, around Asia. This is for the average of Indonesia and India and China, for the whole of the region. So profits have done pretty good. So that's good for share prices. But in addition to that, interest rates over the last, say, 20 years, 30 years or so, have come down. And that's also good for stock markets. So profits have moved in the right direction, and interest rates have moved in the right direction as well. And if I'm not mistaken, the next slide might show us what has happened with stock markets in Asia. Exactly, they've gone on and up for that particular reason. To be honest, that's actually the whole story already. If you actually can imagine this and you can apply it, you're done. You can actually understand what happens in stock markets. You just have to learn to play with it. So you see, for example, in the morning that stock markets are down. Then you look at the interest rates. Hey, the interest rates, let's say, are down. No, if they're down, actually stock markets should have gone up. So why have they moved in the opposite direction? Therefore, something must have happened with what people believe is happening with the profits. Maybe a profit warning of a company or something like that. Or data has come out, has been announced by governments that suggests that the profits are coming down. So then you can see what that news is. And if you do that, you can actually read the markets very easily already. That's the whole story. Now, there's a bit of complexity to it, and there's a lot of other things going on as well, but go on, next slide. Yep, next slide. We're going to now look at Asia a little bit, because the other problem we have is that people think that, oh, if I have to understand interest rates and profits, they think that profits is the same as an economy. If you ask people, what do you think is going to happen with the stock market? A lot of people say, well, you know, I think the economy is doing pretty well. The problem in Asia is that the economy has got very often not too much to do with the profits of companies. Even here in Indonesia. And I'll explain you to that to a certain extent. So you sometimes have to think a little bit further than just thinking what's going on with the economist or with an economy. I'll explain in a second what this is. First of all, how big are stock markets around the world? 125 trillion US dollars. That's a lot of money. And you can see most of it is actually America, Europe, and the rest is Asia. Asia is actually quite sizable in total stock markets around the world. Next slide. But the market that dominated is Shanghai. Shanghai is big. Shenzhen is also big. This is actually the size of the market, and this is how much they trade. So Shenzhen trades an enormous amount. It's the most as we call liquid market. The most trade every day takes place actually in the Shenzhen stock market. These two markets together are the onshore Chinese market, and they're really big. Japan is big, Hong Kong, India, Korea, Taiwan, and then you have Thailand, Singapore, and Indonesia. Very, very small. So the Indonesian stock market is very, very small. And what that means that Indonesia is a bit like if you go fishing, yeah, and you got, what's this thing called actually? I forgot actually. If you go fishing, you have this kind of marker in the water, and if then a fish bite, it goes on the water, yeah? And what?
Bait.
Yeah, so the bait is actually under the water, people bite. Anyway, you got this marker, and it hobbles up and down basically as the movements are. So because what small changes here can have a big impact on those markets. That's the overall message here. Next slide. These are all the stock markets in Asia. But basically, and you can look at it later on, you can get the slides and we can go in detail how they make these stock markets and how they measure them, what the market cap is, and etc., etc. But it's actually all not too relevant. There are a couple of stock markets that have distinctive sort of attributes that make them stand out. Indonesia is actually one of them. Next slide. The Chinese market, you have a China block, a North Asia block. Nextly, maybe that is the next slide. I think there's another one coming. Yeah. There are 4 blocks of types of stock markets in Asia. You have China, Hong Kong, and Singapore. They are very dependent on what happens in China. And of course, what happens in the economy of China as well. Because that's where most of their businesses are. Hong Kong is effectively just a city in China. It's a separate entity. But most of the companies that are listed in Hong Kong do their business in China. So these companies are what we can call the Chinese bloc in that sense. They're very much driven what happens with China. Korea and Taiwan, the companies that are listed there are different. These are technology companies. They make chips and smartphones, Samsung, TSMC, and these sort of companies. What happens in Taiwan with the local economy is absolutely irrelevant for the vast majority of the Taiwanese companies, because the products that they sell in Taiwan is tiny, meeny, compared to the products that they sell. Samsung sells iPhones here and in Brazil and in China and in Europe and in the US and also in Korea. But if the Korean economy doesn't do so well, it's so tiny it doesn't really matter for Samsung. So these are markets where the global economy, in particular the big economies, that Europe, the US and China, are very important. Then you got ASEAN and India. And they are different, but actually there's a lot of similarities. The issue here that these are markets that are very much domestic. They are inward looking. That sounds bad, but I mean it in a good way. These are companies that don't sell product in the whole world. No, they sell products that are sold in the local market. And that makes some of these companies fairly unique. And I'll give you a nice example of that in a second. So there are different sort of stock markets, and therefore the profits and what drives the profits in these markets differs to a large extent as well. So if you want to trade these markets, you have to understand what the dynamics are. So for example, if you think that the global economy is doing well and that there's an AI boom and there's a lot of tech going on, you want to be in Taiwan and Korea. If you think China is going to recover, of course you want to play in these markets. But if you don't want to be in these markets, you can play in these markets. So that's the way it actually works. Good. The funny thing is there is not one China. There's about 5 China in stock markets. Next slide. China's got Shanghai, it's got Shenzhen, it's got Hong Kong, it's got companies listed outside of it. The thing is, I said that the stock markets are driven by profits and interest rates. But China is a very unique place that it's a closed system. That means that the interest rates in China can do whatever it wants. It doesn't, money can't flow out, and therefore China can set the interest rate whatever it wants, independent of what happens in the rest of the world. Indonesia can't. If the US raises interest rates, Indonesia has to follow, because if it doesn't do so, the rupiah falls out of bed. So Indonesia and India and most other countries in Asia, and actually the whole world, have to follow to a large extent what the Fed is doing, the central bank is doing in the US. Not China. China said, we close our account. You can't take money in and out of China. It's forbidden. So you have to keep your money in China. You can take money out of Indonesia. You can send money on your iPhone to an account. If you open up one in Singapore, no problem whatsoever. For Chinese people, not possible. The advantage that China has is that they can therefore set their own interest rates. And now a funny thing happens. I said share prices move on profits and interest rates. So let's say you have a company that is listed in Shanghai and it is listed in Hong Kong. The profits for the same company is the same because it's one company, right? Company ABC, it's got shares listed in Shanghai, listed in Hong Kong. So the profits go up or down. That's the same for the Hong Kong. If you buy in Hong Kong, in Shanghai, your share and the profits remain exactly the same. But the interest rate in Hong Kong can move up and in China can move down. That means that the share price in China goes up and in Hong Kong goes down for the same company. So the same share in China can move in completely different direction than in Hong Kong. That's very odd and extremely confusing. But it's a way people try to make money out of it as well. If you're a clever trader, you think what interest happens in China and the US, that's a way to play these sort of things. But it's a very unique situation. There's only one place in the whole world where this can actually happen. It's something that is called Stock Connect. So China is quite odd because it's got money and companies listed outside of China and companies that are listed inside of China, and it's got these sort of capital controls. Next slide. China is very diversified. It's got a lot of companies. That's good for the market because if you invest in China, if one company does bad, another company, Tencent, Alibaba, HSBC, that's pretty much all Hong Kong. Next one. In Korea, Taiwan and Japan, next one, it's tech. In Taiwan is the most concentrated market in the world because nearly 70% of the market is basically just tech companies, and to be honest, they're all related to one company, that's TSMC. So it's just chip making. That's very unique, and that means that chip making and demand for chips around the world drives the stock market in Taiwan and not what happens in the Taiwan economy whatsoever. We don't care what happens in the Taiwan economy. We want to know what happens with chips. And over the last couple of years, we want to have chips everywhere. We have chips in TVs, in cameras, in watches, maybe the flowers, I don't know. But there are now chips everywhere. 15 years ago, they only used to be in computers. But everything gets electrified and needs to connect with each other, and that's what the Taiwanese can make. Next slide. India and Southeast Asia are completely different, and there's a secret to this. Next slide. India, first of all, has got a couple of industries that, for example, Indonesia doesn't have. It's got IT, it's really strong in IT, and it's very strong in pharma. Indonesia doesn't have it. That means that India is more diversified than, for example, a market like Indonesia. But that's not the secret. Next slide. I already mentioned it, more diversified, it's so relevant. Next slide. There's one. I don't know if you've ever been to India, but here in Indonesia you can almost imagine it. The moment you get out of the airport, you get stuck in traffic. To distribute products in India is even more difficult than in Indonesia. To get bananas from South India to North India, it's simpler to get them from South India to New York. It's a mess. The roads don't work. The trains don't arrive. There are potholes in the roads. And in India, and you don't have that in Indonesia, you have to pay taxes. So imagine you go from Jakarta, taxes between states. So let's imagine you go from Jakarta to, let's say, Surabaya, and you drive from West Java and you get to Central Java. The truck needs to stop in India, in the past at least, has then to go to the immigration officer, tax officer, say, I'm going to go into Central Java, I get a truck full of bananas, it's valued at $1,000, here is my tax, and here, and I need a tax receipt, and you need to write it down, boom, boom, and then he goes back in the truck, goes to Central Java, and then he arrives at East Java. He's got to stop the truck, get out, fill in, line up. Very difficult to get around. You don't have that in Indonesia, but there used to be a situation in the past in India. And I'll get back to that a little bit later on. But distribution is the secret in India. And actually to a certain extent in Indonesia as well. If you can distribute in this country, you can actually really make good money. So distribution is key, and therefore these markets are really domestically orientated. They are dependent on consumer products that are sold here. Indonesia or India, aside from IT and pharma, it doesn't make product for the rest of the world. It makes products to sell into this country. And actually this bookstore to a certain extent is like this. There's a distribution network of books that are being sold into Indonesia, and Periplus has that distribution capability. Indonesia has that as well. I want to explain that for most people. They don't know how Indonesia looks like, so I got a few slides on that. And of course in Indonesia something has happened. Next slide. That's the internet that's come through as well. We've already been here as well, so we go next slide as well. Japan. Okay, there was one slide I thought was there, but let's keep it up. There is one other thing that has got to do with demographics, and then I'm going to combine two things, and then maybe a picture start to emerge how India and China or maybe Indonesia to a certain extent work. Let's assume for a moment that two families in China and India get exactly the same job with exactly the same salary, and that all the goods that are being sold in India and China are exactly the same price as well. And let's assume that this is $1,000 in China. So the guy works in, let's say, a bank, and he gets $1,000 every month. And in India, the guy works for a bank, and he also gets $1,000 every month. In China, his wife, most of the time, will also work. So the family gets $1,000, and let's say she makes 500, just making an easy number. So the family household makes $1,500. In India, women don't work. It's one of the countries around the world where few women actually are being employed. It's almost as Saudi Arabia. So that family continues to make $1,000, while the Chinese make $1,500. How big is a family in China? Well, you got one child policy, so it's husband, wife, child, 3. So they get $1,500 for 3 people, $500 per head in the household, right? In India, they got 3 children. So you got 5 people that got $1,000, and therefore only can spend $200 per person in the household. So with the same salary, with the same economic level, if you want to put it like that, China will buy completely different products than in India. The Chinese have more money because of the household family sizes are smaller. They can go for luxury. In India they can't, because they have more mouths to feed. They focus on more basic commodities. And this is where things come together. In India, if you can sell shampoo, cigarettes, toothpaste, basic products, but you can sell that and distribute that into India, which is a difficult place to distribute, as we just said, you have cracked the code. And if you can do that, you become incredibly powerful. The most profitable companies in the whole planet Earth are Indian shampoo companies, Indian cookie companies, or Indian toothpaste companies. You would wonder why it is, and you'd think, why can't you and I just set up toothpaste? Well, let's say we figure out how to make toothpaste, put it in a tube, we go to India, and we try to say and sell it into India. Well, a truck gets stuck in a pothole. It gets stuck in the immigration office. We can't distribute. Not only that, in, for example, Indonesia, if you distribute your products, as long as you figured out Jakarta and Surabaya, Medan, pretty much it. The rest, to be honest, is marginal. If you can sell your product in Jakarta, you've covered a lot of Indonesia from a business point of view. In China, you need to go to Beijing, Shanghai, maybe Hangzhou, or maybe Xiamen and Hong Kong, Shenzhen. Done. In India, you need to probably go to around 200 to 300 towns, because they're all big towns, because there's a big country, but everybody lives all over the place. So you can't just say, I just only do Mumbai or Delhi, because you miss out on large parts of India. So you need to be able to get to all these small towns and have your trucks to go there, be able to go there. So if you're a company that can figure this out and can distribute, and that might take you 100 years to do so. Hindustan Lever in India started in 1880, Britannica, which sells cookies, started about the same time. You become very profitable, because the moment you and I arrive and try to do it with our toothpaste, We figure out we need 500 trucks, we need all these villages, we don't know what we can sell, we need warehouses. Oh, this is going to cost us a lot of money. And to be honest, our competitors, the Indians, will probably make sure that our tax gets investigated or our trucks get stuck somewhere. They're very clever in that as well. So what happens in the end, we go to the Indian company, say, can you do this for us? And they'll say, we're more than happy to do that for you. Half the profits are for me, and every product I sell today, I pay you in about 12 months' time. They take all the cash in first before they give it to you for a long time. And you do that. And this is what makes these Indian companies incredibly profitable. The most profitable companies on the world. Indonesia used to have this as well. Indonesian cement companies used to be extremely profitable. What has happened in Indonesia is that they build out infrastructure, roads, railways. I remember in the 1990s, if you take a train from Jakarta to Surabaya, there were goats on the train and people's nasi goreng everywhere. It was a mess, right? People didn't want to go by the train. Now the trains are good. Getting around in Java is much, much easier. Factories are going inland. Distributing your product is easier, and people have gone online here with a lot of enthusiasm. So that's helped as well. They buy online and somebody will deliver it to you. But because Indonesia is now easier to access, this is a problem for Indonesian companies as well, at least some of them. China is making a lot of electric vehicles. It can't sell them in China. It wants to sell them in America, but the Americans say, we don't want your stuff. The Europeans say, we wanted it, but not too much. Where else in the world can they go? They can go to Oman or Jordan, but those are small markets. They're smaller than one city in China. They need to go to big places. And what are the other big economies? Mexico, Brazil, India, Indonesia, Turkey maybe. That's about it. So now you have a flourishing economy here. You got profitable auto companies here, but BYD and all these Chinese companies will come in. And they will come and compete. And that's not going to be good. It's going to be good for you as a consumer, but not good for the profits of those companies. This is why I said, don't always look what happens with the economy, but look at what happens with the profits of these companies. Because if the competition goes up, the economy can grow, but the profits of these companies are not going to go down. And we've seen this exactly happening in Indonesia as well. The profit growth is so-so for most companies because they struggle to compete with the Chinese products that are being sold here. And we could probably look around them here because a lot of it comes from China as well. And that is difficult for many companies to respond to. Next slide. So, we've looked now at how stock markets work. Basically, profits and interest rates. And profits is not the economy because it depends on where you sell the profits, like the tech products, they don't sell them in Taiwan, but they sell them around the world, but also the competition that drives that. So profits and interest rates. We've also looked at how markets different. The Taiwanese make products that sold around the world. The Chinese sell most of the product in China. The Indians as well. But their distribution is really important. What I tell Indian fund managers is that they need to understand Indonesia because they are building infrastructure and they're going to have similar problems that it's very easy to compete there in the distant future, just like what happened here in Indonesia, where everybody can come in and compete. There's a couple of other big things that happen across the region. First one. Next one, yeah. The US and China are at loggerheads with each other. China needs to respond to this. It knows that the US is stronger. It tries to make sure that in 4 areas it is well prepared to compete with the US. Where is China weak? That's what they need to address. Because the Americans can take the plug out of something, and if they depend on America, China will not grow. Where is China weak? High-end tech products. So he wants to build out his own technology, chip making. They really struggle with this, but that's something they try to work on. Because the Americans are already limiting supply of chips, for example, that allow AI programs to be run. But the Chinese can't make these chips themselves yet. 2, China is weak in food. It eats a lot of tofu and tempeh. They need soybeans. Where do they buy the soybeans? The US and Brazil. If the US tomorrow says we're not going to sell you any soybeans, half the population can't eat tofu or tempeh, and they can't get proteins, or the chicken will probably be killed in 2 days' time or something like that. But dependent on the rest of the world for food. So that's something they invest in as well. 3, they need fuel. Fuel, I mean oil and gas. Where do they get that? They get gas from America, the Chinese. They don't want that either. And oil from the Middle East. And they can only get that into China in 3 ways. Through Pakistan, Myanmar, or through the Malacca Strait in the South China Sea. And what is China doing is trying to secure that whole supply chain here, which is why they're so active in the South China Sea. They are weak there, so they need to build that out. How is China doing that? Electric vehicles. Because electric vehicles run on batteries, and batteries can be charged with windmills and solar, which you can install everywhere in China. So they build out wind capacity, they build out solar capacity, and EVs. If you go to Shanghai or Shenzhen today, clear blue skies, no sound on the street, it's quiet. It's electric vehicles. Not like here, like that, right? So the cities are changing, but it's quieter, it's cleaner, and all the cars are EV. They made a big push, but too big, so much so that they can't sell all the EVs, and therefore they're going to find in other markets, and we just spoke about that. They're coming here as well in that regard. But they do that to be independent in their fuel supply. Fuel, food, and tech. That's where they're weak, and they're trying to build that up. That determines trends in Asia and where this is happening. For example, Taiwanese companies know that they need to diversify. They can't have all their tech just in Taiwan or in China, so they're moving to, for example, Malaysia and other countries in order to build up facilities in there. Auto companies know that they can't just rely on making it in China, so they're moving their production elsewhere. They're going to Indonesia actually, or they're going to Thailand. So for ASEAN, there are great opportunities these days to capture part of that new business that is emerging across the region. And these countries, some of the countries are doing this better than others. Malaysia is doing a really good job. Thailand, in my view, much less so. Second thing. Another thing that's happening is that the region is aging. Actually, not so much in Indonesia, but in other parts, in particular in Taiwan, Japan, everybody gets older. I just read today that the number of what was it again? Diapers for pets is now exceeding diapers for children in Korea. Because there are hardly any babies, and there's a lot of unmarried women who buy pets apparently, and they buy diapers for pets. I don't know why they do that, but keep the houses clean or something like that. It was a funny statistic that came up. But what we see across the region is demographic shifts, and one of them is people get older, and older people get more money. One of the most exciting growth opportunities in Asia is the wealth management business. It sounds very boring. If you think about exciting growth industries, you think robotics, artificial intelligence, I don't know, quantum computing, stuff like that. But actually, Asia is getting richer because all the people have invested, and I hope you do so as well, and accumulated wealth, and they need to put that somewhere. Life insurance product, mutual funds, stock market, anything like that. This is one of the most exciting growth businesses in Asia as well. Last one. And as I mentioned, because we have new supply chains being set up, semiconductors in Malaysia, Indonesia has got a whole EV battery sort of industries emerging. It means that there are new growth areas emerging. For example, in Indonesia, one of the fastest growing cities is Makassar. And places like Gresik and these sort of places, they're growing very fast as well. So not all the growth comes from Jakarta anymore, and this is the case in India and other markets as well. So now we have a situation that there are pan-Asian trends, aging, self-sufficiency in China, in food and technology, movements in supply chains, and new areas, growth centers across the region that are popping up. You can invest in that if you understand companies that can benefit from that. But these are longer term trends that won't change for the next 10 or 15 years. So when you see companies that fit these particular trends, it gives you a certain confidence to invest in them. Then when it comes to investing, we already know what drives it. It's profits and interest rates. So if you understand these two, you can understand the movements of these stock markets as well. And to be honest, if you can actually combine all of this together, long-term trends, interest rates, profits, and how profits are generated, and that's competition and the growth in the economy and these sort of things, and where these profits are generated, you can actually really clearly read these stock markets. So you don't have to go online. Somebody says, I've predicted in the last 10 days every stock that goes up, and if you give me $100, I will tell you where you can make money tomorrow, because he will make $100 and you will not. You don't need to do so. But if you understand these longer term trends and stick with them and invest in them, wealth management, in diversification of supply chains, by buying, for example, component makers that benefit from it, and you understand the timing, looking at when the profits are good and maybe when the interest rates are coming down, which by the way is happening in these days, then you can say, I feel confident to invest in this stock or in that market, something like that. And if you don't feel confident, we go back to the very beginning of the story. You buy an S&P 500 ETF or a global equities ETF. It doesn't matter which one it is. You plug your money in there and you don't do anything at all. If it goes up 30%, you feel rich, don't go out and spend more money. If it goes down 30% and you feel like, oh my God, what's happening? And people tell you to sell, don't do anything at all, just wait. As I told you at the beginning, only invest the money that you don't need for the next 5 years, so you can wait for 5 years. Otherwise you've lied to yourself and you put all the money in there that you need next week. And if you put the money in there that you don't need, you can sit out the waves in the stock markets. You can make it very easy for yourself by just buying a global equities ETF and sticking to it. And some of you are much younger than I am, so you have plenty of time to accumulate that money. If you want to be clever, then you can say, I think the Czech market is going to do well. Then you go there. Or I think India is going to do well. And then you go there. And you look at companies that have distribution capabilities. If you think China is going to recover, then you can go there. And if you think all of these markets are not doing so well, maybe you go to Asia. And if you want to be even cleverer, then you can say, I'm going to look at some of these trends. I'm going to look at wealth management companies or companies that benefit from these longer term trends. But if you don't feel confident, you keep it very easy. An ETF is a diversified mutual fund. The cost of buying it is very, very cheap. It's an easy way to invest online and you're done. That's the whole message. Pretty straightforward. Easy job. So I ever get a very easy job, but I don't tell my boss because he thinks it's very complex. We like to make things really complex in financial markets. Lots of numbers on the screen, lots of numbers here like I had in the beginning, interesting charts. A lot of that is interesting if you can read it, but sometimes you got to keep things extremely simple and start with very simple ingredients, and then you can read it, and then you understand that all the charts, what they tell you, and that's it. So don't get blown out of the water by all of these interesting charts or interesting stories. Just keep it extremely simple. Interest rates and profits, and if you don't want to go there, just buy an ETF, diversify, don't buy and sell, stick with it for the long run, and you'll be very happy having done that. Thank you very much.
Oh, thank you. Please, ya. Ya, terima kasih. Ya, menarik banget ya ulasannya. Thank you, Mr. Herald.
Yes.
Saya jadi ngerti. Silakan, Mr. Herald. Please.
Oh, it's okay. I can stand.
Yeah.
It's okay.
Oh, it's okay.
I've been sitting for hours. So
Oh, ya. Ada 3 hadiah. Jadi ada Mas Nugi, siap-siap ya. Siap-siap dulu, lihat dulu. Silakan Mas Nugi, kamu lihat ya semuanya yang hadir ya. Tunjuk jari siapa yang paling cepat untuk bertanya. 3 orang penanya pertama dapat hadiah buku gratis. Please, 1, 2, 3. Oke. Oke, please. Ya, silakan.
It's very good to get people questioning things. Very good. I never thought about that. I bet you paid them for it. Great clever.
Yeah,
You should
please.
become a banker.
Ya, silakan memperkenalkan diri sambil berdiri ya, please.
Boleh
Okay.
bahasa Indonesia juga?
Ya, please.
Quickly
Ya.
translate it. Otherwise
Yeah.
you can do English.
Okay,
Yeah.
okay. Thank you. Thank you for your time. My name is Callista. Thank you so much for your presentation. It was so comprehensive and very informative. I was especially enlightened by Indonesia's history on the stock market.
Yeah.
I myself work in the stock market here in Indonesia, but I feel like what you mentioned today was something that I couldn't really learn on the job, so I'm very thankful for that. So I guess my question today, since we've been talking so much about interest rates, is what is your opinion on the Fed's rate cut, which might happen next week, and where you think this would impact Asia, especially in Indonesia, and if you think that Bank Indonesia would also cut rates in advance before the Fed does?
Yeah. So what I think is completely irrelevant to a certain extent, because I can say whatever I want, but it's the market that determines this, and the market is determined by billions of people, or millions of people, billions of people that play in the market, right? It's the biggest sort of democracy in the world, stock markets. Everybody can play in them. And what does the market tell us, and I do agree with that, by the way, is the Fed is going to cut interest rates, inflation is going to come down, and interest rates are going to go further down in 2025. And what did we say at the beginning? Lower interest rates, it doesn't make sense to keep your money in a deposit because you don't get too much anymore. You want to put it somewhere else to stock markets. So this is going to be positive for stock markets, and particularly Indonesia, to be honest. I think Indonesia is already responding to that. That's why it's already gone up. So this is good for stock markets. This is good for Asian stock markets, as long as the profits don't fall. Right? So we need to make sure that the profits don't fall. This is a problem for China because they have a profit problem in China. Not so much in India. The problem in India is it's really expensive. People locally have gone really ballistic on that market. But this generally is positive for Asian stock markets, in particular those ones that are very sensitive to it. Remember, some of these big balls are really big, and small ones really small. Indonesia floats around. This is a big liquid market, such as Indonesia. By the way, I forgot to tell you, I'm on LinkedIn, but also we run a podcast together with my chief economist at HEBC. It's called Under the Banyan Tree, and it's me and him chatting on financial markets. And we do it for the proverbial German dentist, we always say. Somebody who's got a bit of money, who doesn't know anything about Asia, but wants to know something about Asia. So it's a very easy, approachable chat to keep people updated on what happens in economies in Asia and stock markets and markets in Asia as well. So do I think they're going to cut interest rates? Yes. Do I think they will continue to go further? Yes. Is that already priced in the market to a large extent? Yes as well. But probably this is still going to be positive for Asian stock markets. Correct. Thank you.
Thank you. Sudah terjawab? Oke? Thank you. Kalau kurang puas, kita berikan tepuk tangan dulu. Kalau kurang puas, Mr. Herald atau yang biasa disapa Mas Heru. Mas Heru ini panggilannya. Ya, Mr. Herald itu aktif di LinkedIn, jadi bisa hubungin langsung connect dengan beliau. Silakan. Terima kasih. Terima kasih. Oke, the second.
I'm going to stay forward with you, Herald. So my name is Pranita, and I work in an energy company today. And we are so heavily invested in oil and gas thing. And I want to know about because the profit is getting down, and I also see, another oil and gas company. The stock market is the stock is always like going down, and I'm really worried about that. So, what do you think about the energy company, possibility to, to raise again the profit? So, should we diversify our business, or should we divest it our oil and gas thing? Because everybody today like talking about sustainability and then ESG and all of that, and we are kind of overwhelmed with that. And then I also work because I'm still young here, and I run the company for another couple of years. So, what do you think about that? Thank you.
So, you want to know what will happen with the share price of this particular oil and gas company. I don't know which one it is. So we go back to the basics. What drives profits and what drives interest rates? So interest rates, which you said, they're going to come down. That should be good for all companies, including yours. So the question then is really, will the profits be good as well? Now, interest rates are coming down because the world economy is getting worse. And therefore, factories won't run up as much. We don't need as much energy. That's no good for oil prices. Oil prices could therefore come down. In addition to that, we want to move away as a world away from oil. So not only do the oil prices or demand for oil weaken now, probably in the longer run as well. That's not good for you. So the question is, which one is stronger? I suspect over the longer run, that's not going to be good for the oil company. It needs to diversify. There are countries who have clearly stated by the end of 2015, you will still be a young lady then, I will be a really, I don't know if I'm even going to be around by then, but that doesn't matter. They stated by that time we do not want to use any oil or gas whatsoever. It's going to be solar, or wind, or nuclear, or hydro, or something like that. So the profit story is this, and the interest rate story, so that's not good, and the interest rate story is good for you as well. But my suspicion is that the profit story is going to be more important. So I worried that for the share prices for one of these oil companies, over the longer run, they will struggle. And the ones that will survive, who can reinvent themselves, they need to seriously think about that. And you should also think about it, because I don't know your company, maybe they are trying to do so. But if they can't, you need to think, can I stick with this, or should I look for something else as well? Because, I tell you, in the 1990s, the big company that ran computers is IBM. It's right away. The big company that ran autos around the world, Ford and these sort of companies, some of them don't exist anymore, Ford still exists, but new technologies and new ideas come up and new companies emerge. And the old ones disappear. I wouldn't be surprised that anybody here does a presentation about oil and gas in 100 years' time, that people don't use oil and gas anymore, or very, very little. They've gone completely on solar, wind, and other systems. I don't know, maybe they got big batteries flying in the sky, taking solar power in. You never know. But as a world, the vast majority of countries, Indonesia included, have stated we want to become net neutral, we want to get away from oil, gas, and polluting sort of things. So that is bad. But maybe your company will reinvent itself and do something. Some of the oil and gas companies are really big into green. And also, this is not going to happen overnight. It's going to be a slow process because we still need the lights on. So we can go to solar, but if it's a bit clouded, then we can't have the lights on. So we still depend on coal, and we still depend on oil and gas for at least another decade, if not longer. But the trend is this way. That's for sure.
Trend is going down.
Yes.
That's for sure.
That's for sure.
Okay.
Thank you.
Nothing
is for sure.
Thank you. Kita berikan tepuk tangan dulu ya. Oke, thank you sir. Silakan, mystery booknya dikasih. Mystery booknya. Ya. Oke, please, Mr. Marcus ya.
Yeah.
Okay, please.
Marcus.
Yeah, my name is Marcus.
Yes.
Yeah. Fun fact to know, you cannot see it, but I was actually born in the Netherlands, in Den Haag.
Oké,
I grew up there.
Je spreekt helemaal vloeiend Nederlands.
Ik spreek Nederlands, ja, heel goed. Wonderful presentation. I think it's very concise and easy to understand. And I'm certainly going to buy the book.
Thank you.
Yeah. And my question is about the liquidity. If I see on the chart, Indonesia is quite small in liquidity compared to Thailand, South Korea, and two other countries like Taiwan. Yeah.
India, yeah.
While it is the fourth most populous country in the world, and so my question is, do you think the liquidity will increase over time and even surpass those countries? And what would drive this the increase in liquidity?
I just had a podcast recording whereby we talked about this in a very different sort of concept. But yes, given the size of this country, it should have many more companies. Why that's not the case is a whole different sort of philosophical issue altogether. India has got 2 companies listing in the stock market every day. A lot of Indian companies are popping up. That market is growing bigger, and it's already big. Indonesia should be big as well, but it isn't. And I don't know exactly the right answer for that, to be extremely frank. I have a couple of ideas, but it's not the way it is. This is a major problem if you have more than, say, 3 or 4 billion US dollars to invest. Do you have 3 or 4 billion dollars in your pocket?
Not at this moment.
Okay, now that is not a problem. Because even if you go to illiquid markets in Asia, it will trade at least in illiquid markets $10 million a day. So if you spend more than $10 million, you can trade in places like Vietnam and the Philippines. Indonesia is even more liquid. In Indonesia, hundreds of millions of dollars around. So unless you have an enormous amount of money, yeah, and you sit in London or New York or Hong Kong, and your job is a big pension fund, and it runs $5 billion or $10 billion. There are pension funds that go in the hundreds of billions of dollars, and you want to buy Indonesian companies, then you say, okay, let's allocate $50 billion to Indonesia. Then you want to buy companies here, and they need to be $100 million. You need to be able to buy like that. You can't do that here. So if you have an enormous amount of money, that's a problem. But for us, mere retail investors, it doesn't matter because it's way liquid enough. And this is one of the biggest advantages of stock markets. People always want to buy houses to invest because they think houses are safe. If you buy or sell a house, it costs you 3 or 4% with a retail broker and 2 or 3 months to find somebody who wants to buy a house, and they got complaints about it, and if you got a house it leaks everywhere and stuff like that. Stocks in the stock market you can sell in a fraction of a second, and the commission you pay is almost close to zero. You can buy it and sell a company now, I own it, sell, done. It is possible online, literally. In houses it's not. It's so liquid that for us it doesn't matter. So Indonesia is not very liquid. For us, the small players, it's liquid enough. As for the question, why isn't Indonesia bigger? Why doesn't it have more bigger companies? Why aren't there more tech companies that have emerged in other places? I don't know. It just hasn't happened. Maybe it takes time. I got a couple of reasons. It has to do with the Asian crisis, and Indonesia was late to respond to the online sort of revolution took place because we just had the 97, 98 problems and these sort of things. So I hope that over time it emerges, and we've seen more and more companies yesterday coming here, Gojek and small companies like that, Tokopedia, these sort of things, and new companies that emerge. But Indonesia needs more of those. It's more people that set up companies and grow them into bigger businesses. Maybe you can do that. Why not? Yes. I hope that answers your question to a certain extent.
Thank you. Kita berikan tepuk tangan dulu. Terima kasih. Silakan. Waktunya sudah hampir habis, Sir.
Yep.
Jadi kami bolehkan 2 lagi, 2 penanya. Oh, please, 1. Oh, yeah, please. Silakan. Yeah,
it's okay.
Yeah, it's okay.
Hi, thank you very much. Very informative speech and presentation. We really appreciate it. I think I just have a question about like risk management on like how you decide which countries to invest in, because I know that the currencies of the value of the currencies are usually something that you have to really think about. For example, you talk about how profits come up, interest rates come down, but like say you just convert your currency, say you have the dollar and you come to Indonesia and you invest in the stock market, and over time the value of that currency is the purchasing power is decreasing.
Yep.
Profits are going up, but
not in dollar terms.
Yeah.
That's right.
Or the other way, right? So you do have to sort of think about the risk factors that you have with the currency that you're actually trading in the country.
Yep.
How do you do like a really great risk assessment on the country? Do you look at 5, 10, 20 years, and if you look at the governments on how like the regulation that they have, like how do you decide? Because you have lots of markets, like you said. Maybe you can kind of share your thoughts about that.
We do 2 things. My boss tells me you have to look at the longer run. So we look at longer term currency trends. We try to figure out where we are with the currency. And in certain markets, for example, the Taiwanese dollar, the Hong Kong dollar, it's fairly stable. Indonesia, not. 25 years ago, it was probably closer to 2,000 or 3,000. Now it's, 17,000 or something like that, right? So it weakens. This currency weakens in India as well. There are reasons for that. Broadly speaking, India and Indonesia tend to weaken over time. That's not bad. That's just the way certain things are run in this country. And that is not bad. It's got to do with the way monetary policy is set. It's just a normal consequence of that. Taiwan and Korea, they try to keep their markets really stable against the US dollar, but they therefore, for example, have to follow interest rates in the US much more. And China does its own thing because they get closed capital accounts. So we try to figure these things out in the long run, as my boss said. But to be honest, if we are wrong in it for about 2 to 3 weeks, my boss is already complaining. So actually we are very short-term in that as well. And the trick is very often, when currencies really, they tend to overshoot. So if a stock market falls out of bed and the currency weakens, and actually you think in the long run this should be okay, that's when you want to take more risk. But if the currency is really strong and the stock market is also really strong, you try to stay away from that. Because in the long run, it actually evens out. So you need to buy when it's really cheap, sell when it's really expensive. That sounds very logical, but that's how we, broadly speaking, deal with it. There's much more technicalities involved, but it will take me another hour. It has to do with all sorts of economic theories.
Can I just ask a follow-up on that?
Yeah.
So then, which market, based on what you know that slide earlier that you had all the different markets, which one at this point, you know, which area of Asia is in that sort of situation?
Yeah,
right.
Actually, Asia is
we're really looking to find that market where we have high risk, high probability, possibly. Where do you think?
At the moment, the whole of Asia is probably the currencies are a bit cheap, so that's good for us as an investor. Because the dollar has been strong, the dollar is going to probably weaken a little bit. So the Asian currencies could do a little bit better. In particular, my suspicion is the ones that normally trade the most and go up and down the most, India and Indonesia. So actually, then come to think of it, the Indonesian stock market hasn't done so well. It's starting to recover. The currency hasn't done so well. So it might also do better. So actually, this might not be a bad time, actually, in that sense.
Right. So come in strong with the dollar, get a lot of value. Profits go up in Indonesia and then sell it back to the dollar after.
That's the trade. Yes. We did it a couple of times. Yes. Good luck.
Oke, thank you. Kita berikan tepuk tangan dulu. Terima kasih. Ya, thank you, sir. Ya, tinggal satu penanya, please.
No, sir.
My name is Varsha. I don't have any recent experience in the stock markets at all. I did invest about maybe 25 years ago or so. I was making good money from at least on paper, until the 98 crash, where a very healthy bank was practically shut down due to political reasons by the Indonesian government. So I basically lost everything. But it wasn't much. When I put it in, I always put that in the back of my mind. If I lose this, I'm going to laugh it off. I'm not going to be that New Yorker guy who goes out in the street, gets homeless, and starts killing people.
Yeah.
Because that's terrible, the things that happen.
Yeah.
So so after that I never touched it, and I forgot how to do it. I've not kept up with it. So my question would be, let's say I want to play around the same way, put in 20 million rupiah right now. Where do you think I should put the money in terms of what stocks? Specifically, maybe even name the companies, whether I should split them into 2 or 3 or just on one. What would you do if you had that 20 million rupiah you just want to play around with and get some experience?
So this is a nice example whereby if you buy one stock, there's a risk that that company goes bankrupt or for whatever reasons is taken out. You lose your money. But if you buy a fund that's got 500 companies in it, the probability of 500 companies all going bankrupt at the same time is very, very small. And the probability of 500, say, biggest US companies going bankrupt at the same time, the only scenarios I can come up with that happens is that a meteoroid hits Earth and the dinosaurs come back or something like that, something really crazy. And by that time we don't really care about the stock market, we need to survive or we're gone. Nuclear war. So this is the first thing, you want to diversify. Unless you know these companies really well. You want to diversify. As I said in the very beginning, we got 150 guys who got at least master degrees and 10 years of finance experience and know these companies inside out, and with them we invest because they know very well what goes on and track the stocks every day. If you can't beat with them, diversify. You do that in a fund, a mutual fund, and if they're traded on the stock market, they're called an exchange traded fund, and that is an ETF. You can buy those very simple. That's first thing. But your question was something else as well. Oh yeah, what should you buy now if you've got $20 million? Now this, unfortunately, you have to check it out here. This is a bit of a problem because I work for a bank and I provide advisory. Regulations in countries, including Indonesia and Hong Kong, tell me I cannot provide direct investment advice because regulators want to protect you against people like me. I actually have the best intentions to you, but I work in an industry where not everybody's got very good intentions. and the banking industry has cheated people out of all kinds of opportunities in the past. So there are strict regulations in place about who can provide advice, and we can only talk and provide detailed advice, like I think you should buy this stock right now, and this one at this price, only to what we call professional investors. Those are institutional investors, people that got $5 billion, like Marcus here, or big pension funds or something like that. So I can't give you a list. What you can do is you listen to our podcast, figure out a bit what I told you, interest rates, you can hear what our views are, make up your own mind, or simply go to the HSBC relationship manager and ask him if he can provide you the advice that we give him. But I can't give you a list of stocks. But if I can give you one last guideline, companies that tend to do well are companies that have something interesting, a product that is easy, that's good to make, but it's not easy to compete with. In the past we thought car companies, but now we have a lot of Chinese car companies with the new technology, electric vehicles, that come and compete. But you want people that have either a product that is really special, like TSMC makes chips, and nobody else in the world can make those chips. Everybody's tried to do so, it can't. There's a company in the Netherlands called ASML, it makes machinery for the chip making industry. There's only one company who can do this. It's so incredibly cool now. That's one. Or companies that can distribute and get and reach to levels where other people can't. Like this Periplus store. Periplus is in the distribution of bookstores in Indonesia that other people don't have. It will be very difficult to build it out because you need inventory, they're probably the warehouses. I don't know how you guys run all this. But they have their strength is that they have a distribution capability. So go for these two things, special product, strong distribution capability, if you want to go for individual stocks. Otherwise, stick with the ETF.
Oh, ETF.
I hope that gives you a little bit of guideline.
Oke.
Thank you.
Terima kasih. Kita berikan tepuk tangan. Sekali lagi, Sir, kalau masih belum puas, hubungi beliau di LinkedIn ya. Wajib follow karena dia selalu cepat banget responnya. Mas Heru ini cepat banget responnya. Oke. Karena waktu bagi seorang investor maupun trader, time is importante. Sangat penting banget. Saya seorang investor juga, waktu sangat penting. Jadi waktu juga menunjukkan kita harus. Ya, saya yakin juga Mr. Herald juga sangat menghargai waktu. Kita doakan beliau besok akan juga tampil di Endgame Town Hall. Tadi juga beliau juga habis syuting di podcast ya, podcast bersama Mr. Gita Wirjawan. Jadi nanti kalau filmnya jadi wajib ditonton ya gitu.
But that wasn't about stock market.
Ya, Majapahit. Ada satu tadi saya sebagai yang belum terjawab sebagai closing statement ya. Di sini ada Mr. Marco. Tadi Mr. Marco tanya, kenapa? Ini untuk closing statement. Kenapa Sir punya buku Asia Stock Market, bidangnya banker, kenapa nulisnya Majapahit sama Jakarta?
Okay, very easy. I enjoy writing. I enjoy Indonesia. I enjoy history. So for me, writing about Jakarta and Majapahit was real fun. This actually was proposed by a publisher. So why don't you do that? And I thought it's a nice way for me to practice my writing skills, because I know exactly what to write down. With Majapahit, I needed 3.5 years to do research, visit temples, read up, try to understand this. I've already done 20 years of research for this, so this took me about 6-7 months to write down. So for me, this was actually practice to write. I enjoy it, but I'm not going to write another book about stock markets because I like doing it about Majapahit and history of Indonesia much more. So that's how it happened to be. But I think this is going to be eventually an odd one out, and I hope to have more books like Majapahit in the future.
Oke, terjawab ya, Sir. Thank you. Terima kasih. Terima kasih untuk malam ini, dan kami kembalikan ke Mas Nugi.
Silakan duduk. Terima kasih Mas Epi dan Pak Herald. Ini ada apresiasi Pak Yudo, ada sebuah buku spesial Pak Herald yang baru tiba pekan ini juga. Saya undang untuk maju ke depan Mas Tano dan Pak Yudo untuk memberikan sebuah buku ini, buku yang sangat spesial karena bercerita tentang sebuah sejarah. Buku ini juga tadi kok kepikir karena Pak Herald kita banyak Asia. Nah, saya panggil untuk Pak Judo Suwiji.
Thank you. Thank you.
Pak Judo. Barangkali mau satu patah dua patah kata. Ini buku The Golden Road. Boleh dibantu foto?
I know this book very well. I know, but this is just to let you. This is William Dalrymple. I don't know if you've heard of him. He's a fantastic historian. Sorry, this is William Dalrymple. This is a new book about how India transformed the world. This book is just out, I think, 2-3 weeks, something like that. Just a week maybe or so. Yes. I haven't read it clearly because I have it in front of me, but I know that this was coming out. Two things actually. He explains how Buddhism and Hinduism and these sort of things ended up in places like Indonesia, but also how mathematics went to Greece and these sort of places. He's a fantastic historian, but also he retweeted the Majapahit book to his followers, and his followers in Twitter are a lot more than I have, so he's been helpful in marketing the Majapahit book to a certain extent. So, very nice. Thank you very much for this. Very nice.
Terima kasih Pak Judo, terima kasih Herald. Persis jam 19.30 kita akhiri. Terima kasih kehadirannya. Sekarang kita bisa bersalam dengan Herald, ngobrol
tanda tangan
sambil yang tertarik untuk membeli buku dan tanda tangan.
Ya, tanda tangan
dari Pak Herald. Terima kasih Pak Herald. Kita ketemu lagi.
Kita tanda tangan di sini ya. Ya.